Good evening. We are live here tonight for a chat on the YouTube channel here at CBT, and I'm a little bit early. We are just a few minutes before we officially get started, but as this is a recording, or will be recorded, anyone who's watching this as a recording, even though we're not officially starting yet, I'm just letting just people are starting to come in here. And so if you are coming in, as you're coming in, do say hi, and we can start having a chat. And so what I'm going to do in this, we be properly live in a couple of minutes time, is just have a bit of a chat here tonight. Chat through the markets. A lot going on, obviously, over this past week or so. So I thought it was timely to come back and do a live broadcast again. And by all means, I can take any questions that anyone has as we go through this evening as well, and just have a nice interactive session. Looks like, I'm looking at the screen here, I think you should be able to see me. Hi, Harry. Hi, Conscious. And so I can see people are coming in. So that's now, we've just got just over a minute to go. It's funny when you start early these broadcasts, because I'm conscious of the people who are watching it as a recording, because we get a lot of people watch them as a recording, and so I can't have dead air. Anyway, we're not officially starting for another minute or so yet. So if you are watching the recording, you can always fast forward. Biscuit, well met. Well met. Hope you're well. What's that mean? Maybe you meant to say, I don't know. Well met. I don't know. Is it? I am. I'm good. Thank you. Anyway, yes. Thanks, Harry. Yeah. I was ill about a month ago, and I was away skiing in the beginning of February, got back and had gastroenteritis the day after getting back. That knocked me for six for a week. And then it took me a best part of a week to get over that. Hi, Dean. And or to recover, because I lost weight and all of that, as you can imagine. But it's been quite nice, actually. I've had a really, as a result of that, I've been really good on the diet, not been drinking any alcohol and all of that sort of stuff. It's been quite nice. So yeah, feel good. So I'm on this whole training regime now. I sort of thought, well, okay, I'm quite enjoying this. Let's see what we can do at the age of 50. So I'm doing a bit of that at the moment. Training hard. Hopefully you're good as well, Harry and Lime Biscuit and Dean. Hi again. So we have just gone past 7 o'clock. So let's get started here. So what I'm going to do is, just by all means, write whatever you want in the comments box. Well, that's the idea, Harry. Yeah. But we'll have a little bit of an interactive evening here for however long. And I've got all this energy, you see. So I think, oh, got nothing to do tonight. Oh, I know what I'll do. I'll do a live broadcast. So let's have a look. What we're going to do is have a little look across some of the key markets, and then discuss everything that's going on. So first things first, I've got the S&P up here, and most of you will have some of these lines on your charts, but I'll go through my charts at least anyway. So this long-term trend line going back, which started at the beginning of 2022. So I've just zoomed out on a daily chart here. It's a beautiful trend line. And what's happened is beautiful as well so far. I've also got, I'll come back to that in a minute. I've also got this rising trend channel, which you can see the S&P has come out of, but I'll talk about that in a minute, this rising trend channel here. And I love this because it connects back to these two lows back here from June and July as well. It's just clean. It's nice. And then lastly, I have this horizontal line on my charts as well. Of course, I could put way more lines on, but that's about enough for me. This horizontal line, what was support at times becomes resistance, resistance here, then broke out, back to support, bounced, came down, back up, tested it, came down, back up, tested it, and came down, back up, tested it again, and came down. It's just the overall price action from technically is actually really good overall when you look at these levels. So I quite like the chart of the S&P. I like the chart of the Nasdaq, which we'll have a look at as well. Marco, I'll come back to that question in a second. Yeah, a good question. If you don't mind, I'm just going to do some analysis now. Now I've started going into the analysis, but I will come back to your question or any other questions that anyone says there about conscious as well, talking about BTC. So, what I quite like about the S&P when it broke out here, yeah, it came up to this level up here. I thought that when it came back down to the lower trend channel line here, that might be it. It had a lovely bounce and then just fell over, especially after when everything started getting a bit quirky in relation to those regional banks out there in the States, SVB. However, at least from a technical perspective so far, we can see that the S&P has come back to this trend line here, the original breakout zone, and is bouncing as currently. So I quite like that. It's holding. I don't mind overshoots, what I call overshoots there, where it overshot it a couple of days or so ago. Don't care about that sort of stuff. In technical analysis, you have to allow for all that sort of stuff. So if the markets can settle here and going forwards, then this horizontal level will come back into play. Now, of course, this trend channel line as well. Is it possible that this is just a retest of this trend channel line having broken down, and then it comes back off? They're all questions. It's not necessarily my job to tell you what I do, what is going to happen. They're just considerations. So anyone who's a bear, well, if it comes back up to that channel line here, it's not a bad zone for a bear to be considering positions, of course. Now, a bull may look at this and say, well, actually, we've come down, we've retested the breakout of the long-term trend line, and actually, a bull might think we're going higher. So if that's the case, then the next level of key resistance, as far as a bull's concerned, is this horizontal zone up here around about 41.40 or so. So a lovely looking chart there, I think, at the moment for the S&P. It's got a bit hairy over this last week. We'll talk about the volatility in a moment, but I just want to go through a couple of markets here, like the Nasdaq as well, because I think this Nasdaq, I'm just going to take this trend line off. It's just going across these highs here on the daily chart over this last couple of weeks. I'm just going to take that one off. And again, zoom out a little bit for the Nasdaq, so we just get a sense of just a couple of levels here. Obviously, I could put more levels on. So, again, much like the S&P, we've got this longer-term trend line, which started similarly to the S&P, or certainly the top of it is tracked back to early 2022, and so a nice trend line there. Hasn't come back down to retest that. The Nasdaq has been that much stronger as of late than the S&P. I love my black moving average is my 50, and my gold and yellow one is my 200. So we've got a lovely golden cross going on here as the 50s crossing up through the 200. And of course, we've got this horizontal zone that I've got all the way along here, which the Nasdaq has pulled back into as well. So if I now zoom in a little bit, yeah, I'll have a look at Bitcoin in a bit. It's not as important to me, Bitcoin, but I will. Obviously, it's not all about what I do. Yeah, I'll have a look at Bitcoin in a minute. So as far as the Nasdaq's concerned here, then again, from a technical perspective, just zooming in a little bit, we can see that it's broken out of this long-term trend line. It's pulled back into this horizontal support zone twice, as we can see, but it's successfully held. And as we can see today, it's having a great break up. So um, that looks pretty bullish. So and one thing that I always do with my technical analysis, whether I'm looking at Bitcoin or whatever it is, I'm looking at the breadth of the market. So if ever I'm looking at a market, whether it's a stock index or a currency pair, which obviously I trade a lot of, or even gold or whatever, then I don't just make a decision based on a pattern based on that particular time frame and that particular market. I want to try and get some form of assessment of what's going on. So let's just say a couple of things here, and we can bring Bitcoin into this actually into this argument. So we looked at the S&P first of all. Then we come to the Nasdaq and we see the Nasdaq is leading the S&P. So now we've got a little bit more information because we're looking at two different indices, and although the S&P's been that bit weaker, I've just shown where what could be going on with the S&P, and now there's a better argument for the S&P, having seen the Nasdaq movement here. And if we just briefly bring Bitcoin into this just for a minute, I can come back to it in a moment. Um, we know that Bitcoin moves in it has a positive correlation with the stock indices, generally speaking. That did break down when we had the Silver Bank affair, and Bitcoin was breaking down hard through that. It's gotten over that, and or the effects of that. Bitcoin has shrugged it off, and there's all sorts of reasons why. Money coming out of other tokens and coins and coming into the likes of Bitcoin and Ether. Um, so that correlation looks more set back in line with certainly the Nasdaq at the moment. So correlations aren't an exact science. They sort of ebb and flow. There's not like, oh, the Bitcoin's up today, so therefore the Nasdaq must be up. It's not quite like that. But certainly we can see a general correlation. And so coming back to the Nasdaq, so we can see that Bitcoin's generally doing okay. And if I come back to the stock indices, therefore, then this looks pretty encouraging, unless the Nasdaq sells off in the next 50 minutes before the cash markets close. So yeah, it looks pretty good here at the moment. Wants to test the Nasdaq wants to test his lower high on the monthly around 15,000. That could mean Bitcoin to around 50. Oh, okay. Let's go and have a look at the monthly chart of the. Oops. Right. So what you're talking? Yeah. I mean, Harry. Um, well, that's funny. Yeah. So the lower high here on the Nasdaq would be here. Yeah, around let's call it 13,500. I'm not 100% sure 13,500 on so that's around this level here on the weekly chart. I'm not entirely convinced that Bitcoin would be at 50,000 if the Nasdaq just pushes up to there. So I'm not entirely sure by that, Harry. I'll be honest with you. But if we see lower closing high, okay, let's go back to the monthly. Are you talking about maybe up here? So that's a higher. That's before. Maybe you're talking about back up in this zone in 15,000. Oh yeah, you did say 15,000. My apologies. So okay, so further up. So if I take this back to a weekly chart, what you're talking about there is this zone up here. Yeah. And I think that if you're bullish on the stock markets, then you sort of pretty much have to be bullish to some degree or another, unless there's another scandal or whatever comes out of the crypto space, then you pretty much have to be bullish on on that space, on the likes of Bitcoin. So, yeah, if you're bullish on the stock markets and the Nasdaq gets up to 15,000, then yeah, you could see. I haven't done the maths, but it makes more sense that Bitcoin could be a fair bit higher. Yeah. So anyway, uh, the taking this back to the daily charts, the stock indices are looking encouraging at this stage. Okay, Marco, I haven't forgotten you. I will come back to your question. So I think that's a good sign. Now, if we come to the bond market, which is really important, now we've seen these biggest fall in bond yields in almost ever, I think, in over this sort of period of time. And so it's been a very dramatic fall in yields from, this is on the 2-year yield here, from over 5% to well under 4% in a very short space of time. One of the members in my trading room is a 32-year, 33-year veteran bond trader, ex-City trader, and he's and that's what he used to do, trade bonds. So we're quite lucky in the trading room that we have he gives us his parts his wisdom when it comes to the bond market. But overall, this sell-off in bond in yields means that there was a lot of money coming into bonds, obviously, and so that's telling us the markets were a bit scared there, and we've had all these repricings of where the Fed policy may end up going, where terminal interest rates may be, and at what point um, they may start cutting. And it got so dramatic even into yesterday or the day, yesterday, that the market was starting to price in 3 rate cuts this year, and it's just gone crazy. This volatility, some of you possibly aren't seeing it if you're not looking at the bond market, um, but um, but these wild swings in interest rate predictions in the market have been quite amazing. So um, thanks, concept. And so yeah, anyway, an interesting, very interesting uh, period here when it comes to that, and how the market's trying to second guess where essentially central bank policy is going. Because if you get it right on central bank policy, then you can get positioned on that as well. Gold has been a beneficiary, generally speaking, here of that volatility, of that fear. I'm calling it a fear premium that gold has benefited from, as traders and investors get scared. There's a flight to quality. So what we've seen is, yes, we've seen money going into bonds. We've seen money going into the Japanese yen, which is typical. We've seen money going into the dollar as well, up until sort of today. And we've seen money going into the likes of gold as well. So gold's just calmed down a bit here because the markets have calmed down a bit eventually today, and we're seeing stock markets going up. So we've got this risk on type of price action, as they call it. So as risk on comes through and money starts piling back into stocks, like today on the Nasdaq and the S&P, and then money comes out elsewhere. Okay, so but gold's having a great run overall. I think this looks very encouraging looking at gold. Um, I'm not saying that gold isn't going to pull back, because it looks like it could well have a bit of a pullback, but generally speaking, this price action looks pretty encouraging. Actually, I'd love to see it at some point. That's not to say that it couldn't chop around for, I don't know, maybe a few weeks, but I'd like to see it have a crack at those highs from early February, and then if it can crack those, then we start coming back and looking at these highs from last year. Now, outside of that, if we look at the currencies, I can look at the dollar index. The dollar index, I think, is a little bit less certain right now. So if I come out to I can come to a 3-monthly chart. And you can see I've got this channel on here, this rising channel on this 3-month chart of the dollar index. you need to be looking at these. I know many of you will be, but if anyone's not, then it's really important to be looking at the interrelationships between markets, because they all sort of interweave. And if you're not aware of what the dollar index is doing, then that spills over into, obviously, into currency pairs itself, spills over into things like gold, and of course stocks as well. So it affects everything. So what I think is interesting with the dollar index is, yes, we've got this nice trend channel that's been in place for some time. We've pulled back into the midline. The dotted line here is the midline of the trend channel. And of course, the dollar index has come into these prior highs as well. So at the moment, the dollar index, is has excuse me, has bounced it off this area here. So I think this is a fascinating battle going on, really. That we've come, and technically the dollar has come down into this zone. I think there's a cluster here, midline of the trend channel, these whole prior zone, high zone, which becomes support. So technically, it should bounce, and it is, and it has bounced. But can it bounce further, or is it going to carry on working its way back down towards the lower trend channel over time? Now, that what we could have is a bit more of a bounce before doing that. We've had a proper rejection off the highs up here. So it could well be that it works its way towards the lower trend channel line. But certainly from a technical perspective, there is scope that the dollar index could still run higher within this channel. Again, just comes back down to personal views, but it's useful information for people to be aware of this if they're not aware of where the dollar index is situated. Now, that is on a quarterly chart, of course, but even if I take this back to like a daily chart, then and zoom it out a little bit, what we're talking about is, well, can the dollar index carry on bouncing from here? It's made a low back here in February, sold off a fair whack since the October highs, and is it launching itself a platform to still run higher? Now, we've got FOMC next Wednesday, and so we've got the Federal Reserve coming out with their interest rate uh, settings for next week, and of course, on the back of that, Jerome Powell will be speaking. So, depending on what is said, and what they decide to do, is going to have a reasonable impact on the dollar. So, if they are pretty hawkish in what they do, then we have to watch out, because then the dollar could be heading a reasonable amount higher. So, little considerations. Obviously, the opposite is true as well. If they're a little bit more hesitant, then we could see a dollar sell-off, and then you're then looking at the dollar coming back into, I'll take it to a monthly chart, into that channel, and then you're looking at the dollar starting to challenge that mid-channel line. So it's all there to play for, and it's all looming literally in the next week. Sorry, what do you think about GBTC? What's GBTC? Sorry, excuse my ignorance. If you're talking, I don't know what that is, Harry, unless you write it down. Am I being stupid? Probably am. You'll need to write that down. So I'll come back to that in a minute. So at the moment, these markets have been fascinating whilst I'm waiting for that to come through. I'm still going to come back to Marco and answer his question as well. Concept, I'll come to you in a second as well. So at the moment, it's been a fascinating period of volatility. Over the counter trading. I I mean, over the counter trading is essentially like a synthetic, yes. So do I like that? No. In that space, for obvious reasons. So if you're just trading a synthetic, potentially, if that's what you're talking about, um, you've got to bear in mind Bitcoin is not a big thing for me. Cryptos are not a big thing for me. One of the biggest things that I have an issue with is the amount of people out there around the world who don't know what they're doing. They get attracted in to cryptocurrencies because of the lure of big gains. And what they don't realize is that what comes with the potential big moves in those markets is that's all very well if you're on the right side of it. And as we've seen over the past year, the amount of people who have lost a lot of money, who have been involved in that. People who are less experienced, yes, because your average Joe opens up an app, puts a few $100s in it, and then just buys various coins and whatever, So we've seen a lot of that. Um, so my concerns are it is an unregulated environment, and so you've got to just make sure you're trading safely. We've seen examples of this over the last year, FTX being a prime example, not regulated, and saying all the right things, but effectively they were squirreling people's money away from them, and saying, "Oh yes, all the money's there," but it wasn't. It was all corrupt and it was all a scam. And and even outside of that, if you're somewhere decent, there's risks with accounts being hacked and stuff as well. So I've invested in Bitcoin in the past, as many of you know, and I'm not saying that I'm not going to be invested, but I always think that you should be, you know, careful with your money. Invest money that you can, in a way, it is speculative and that you can afford to lose. I know that that's not what everyone wants to do because a lot of people hear the stories of the people that have, made millions and all of that, but they are the smaller number, and they're usually people who got in, a long time ago. And so I think that it's just it. But look, I've been doing this for 25 years. I've seen these patterns over and over again over the years. I remember in 2010, 11 when gold was peaking. And obviously, this was before cryptocurrencies. And so it's the same nature of people were chasing returns in gold because they were like, oh, gold's going to go to $5,000 an ounce, and there was all this fever around gold. So it's the same thing that it just moves on. Then we've had the meme stock or the meme stock um, fad over this past couple of years since COVID, and there's constantly new little micro bubbles, and where people are piling into stuff because people like to pile in where they think they're going to make a load of money. Some do, but it's as usual, it's the few that do, and the rest are still hoping that they're going to. So I think personally, I wouldn't put my trading capital into any cryptocurrency because I don't want to risk losing that money because it gets, hacked or whatever. Um, I wouldn't mind, I'm okay with putting some speculative money in that I can afford to lose, but even then, I'm not as enthused by it as I know that other people, because I guess that I'm in a different place. I don't need those big gains in order to make me money because I've already got a decent pot of money that I trade with. So I don't need to try and make, 20-fold my return. And why would I ever risk that? I've been working on that money for the last 25 years, I would not want, but I don't need to either because I can make good enough money. Even if I made, 20% in a year, that would still be really nice amount of capital growth. So yeah, I appreciate that I am in a different position to someone who's got $500 and they want to try and increase that $500 as quickly as possible. But you can still do that trading more traditional markets with regulation like FX and trading indices and all of that. So the potential to make very, very good gains is there. But so yeah, so that's where I'm at really. So I like looking at it, and there's plenty of my members do trade cryptos, but a lot of them don't as well, and a lot of them they might trade it a bit with speculative capital, but not with their main capital that they trade with. Anyway, that's all. Yeah, good stuff. Michael, 20 minutes in and you haven't mentioned the euro yet. uh, I was going to try and, well, I have though, Michael, haven't I? Because I've just covered off the dollar index. So effectively I have. But I can go into the euro, yeah. But yeah, look, the euro dollar is one of my primary markets that I trade. It's the biggest FX pair in the world, highest amount of liquidity and all that. So yeah, I do trade the euro dollar a lot. But I do trade other markets as well. I do trade stock indices. Have been, in recent months, I've been, trading stock indices. But even if I'm trading one particular market, as I said earlier on, um, the it's still reliant on that breadth. So it's still reliant on, if I was looking at the euro dollar, for example, it's reliant on, well, what's the pound dollar doing? What's the Aussie dollar doing? What's the New Zealand dollar doing? I'm not interested in Swiss. Haven't been, because of the risks that we've seen back in 2015. What with the Swiss National Bank pegging the Swiss franc to the euro, and so I think they've learned their lesson, and I don't think that would happen again. But I've never really been involved really with the Swiss franc. So I look at those 6 major currency pairs, and including the dollar yen as well. So I'm looking at all of those. A bit like I said earlier on, if I'm going to be looking at the Nasdaq, I need to look at the S&P and probably the Dow as well. I just need to at least get some element of breadth, and it's the same there. So I don't make a decision on anything by itself. It's multiple time frame analysis, market sentiment, what the fundamentals generally speaking, what the other currencies doing against the dollar as well. So there's a lot going on. It's not just a single entity. Experience talking right there. Oh, okay. Knowing both sides of the risk. Yeah, absolutely, concept. And I think, like okay, said, I think you're talking about the crypto side, and then we had like Celsius last year, that one, disappeared with people's money. And then we had Luna, what happened there. And, so there are risks, there's a lot of corruption in the crypto world. There's a lot of corruption elsewhere, of course, as well, but there's a lot of criminal activity goes on. And so, yeah, I think you're right. If you can take a balanced approach and you weigh up the risks, then you make your decision, don't you? And you make sure that the platform that you're using, you feel is secure and all of that stuff. So, but I'm not the expert on this. There's plenty of YouTube channels out there who know, that is what they do. So anyway, what I'm going to need to, how is trading these days? Coming back to you, concept. Are you more cash or normal speed? What does that mean? I don't know what that means, concept. Cash or normal speed / risk? You're going to need to rephrase that one. Now, I'm just going to go back up to Marco here. We'll go back to the markets in a second. Marco, hopefully you're still there, because Marco asked a question just under 30 minutes ago. And Marco's question was, do you think a beginner can be consistently profitable with a mechanical strategy, meaning a strategy with no subjective rules, assuming he's able to follow the rules? No, I do not. Because I don't think a beginner can follow the rules. And that's the reality, Marco. No, you can't. The problem, I have a real issue with mechanical strategies, as you probably picked up on, if you watch the YouTube videos that go out, because the markets aren't that simple. I have strategies, but I put them into context of what's going on in the market. And I know that's difficult for a new trader. A new trader wants to know if 1 + 2 = 3. Yeah. unfortunately, the markets are so complex that it isn't that straightforward. And obviously, there's plenty of people out there telling you that it is, but well, we don't need to say too much about that. So um, it is more complicated than that. And so for a beginner, especially, to go along, it's such a double-edged sword, because for a beginner, the easiest thing for a beginner is to have a mechanical strategy, because they can't place, it's more difficult for them to place a market into context, it's more difficult for them to do technical analysis and all of that. They haven't built those skill sets as yet. But the downside is it will be nigh on impossible for them to stick to the rules. And I can guarantee that for you. And I'll put a wager, I'll bet you that. And you come back to me in 6 months' time and tell me that you managed to do it, because you won't do. I've been doing this 25 years. I've dealt with thousands of traders over the years, either directly or indirectly. And, you know, it just doesn't happen. Sorry. It's the emotions that are in the markets when you're putting your own money on the line. You can't possibly deal with those as a new trader, in order to be able to stick with a mechanical straight trading plan. Now, if you start off with a mechanical strategy, and it starts off well, that really would help you. But I can guarantee something to you. Your mechanical strategy at some point will go into a drawdown. If you're lucky, it doesn't happen straight away. So even if it happens 4 months down the line and then it goes into a drawdown, you haven't built up any experience of drawdowns at that point. And as it goes into drawdown, you'll start panicking and you'll start overriding stuff. You'll start hesitating. You won't take trades as new signals come through. And as you've just asked me, is it possible to stick to the plan? And that's where your answer is no, it won't be. And the other thing is, with mechanical trading strategies, is that you don't know if it's just the drawdown or actually the whole mechanical strategy has stopped working. And if you carry on trading with it, it'll end up blowing your entire account. You don't know that. So there does have to be a point whereby you say, right, I have to stop trading this mechanical strategy. Now, that point could be that if you've got a mechanical strategy and you've back tested it, the historical drawdown, let's say historically you've back tested a strategy and its historical drawdown was 20%. Let's just go with that. So going forwards in the future, you might as well double that as a potential future drawdown. And that's even if the strategy still keeps on working. So can you deal with a 40% drawdown? Only you know the answer to that. So and if it does go to 40%, you have to turn it off, or there's so many, and then you might see it start, well, I say turn it off, stop trading with it. Maybe it starts, you might think it starts working again, maybe not. If you carry on with it, it could end up gradually just grinding your account down over time. So that's what I'm saying. It's very, very difficult. Experienced traders can use mechanical strategies because they know all the nuances of when to stop trading with one. It's very difficult for a newer, and someone who's newer to trading. So sorry about that, Marco. It's not the answer you probably wanted to hear, but yeah, unfortunately, the trading the markets isn't as simple as that. I just enjoy it, Marco. Sorry, you said much appreciated and stuff. I genuinely just enjoy doing what I do. I was having a long chat with one of my brokers yesterday, and he said, Charlie, because I said, oh, I was on this Zoom call with this broker, and we had a load of stuff to go through because one of my funds is run through that broker. So periodically we have to do a catch up on all that stuff as well. And I said, in the end, I said, "Oh, look, I'm going to really have to go, because the markets are volatile. I want to get back into my trading room." And it's like, he said, "You're so passionate about it, and you want to be there, back with your traders." And I said, "I know. I have this guilt complex all of the time that if I'm away for a bit, I want to get back in, especially when the markets are busy, because I want to be there." So, but I genuinely enjoy it. I enjoy coming on. I enjoy doing these sort of things. I know I don't do these live broadcasts very often, but I do enjoy it. So, like, I enjoy my trading community as well. Of course, I do. So, yeah, so that's fine, Marco. Um, oh, okay, yeah, the interview with UK spread betting. Yes, so I'm just catching up on your comments there. Then, yes. Yeah, it was. I what When I did that, we sat in a room for about. It was a really hot day, and I remember it being baking hot. And I sat there for about 3.5 hours just answering questions and doing the interview, and then they just chopped it all up into small parts. Yeah. So, um, right. What's your target for annual returns, and what should be a realistic target for for retail traders? Great question, Lime Biscuit. Have I missed anything else? Let me just double check. I haven't missed anything else. Don't think so. Okay. Oh, sorry. I'll come back to a concept first because I didn't understand his previous question. He said, with the volatility and how the market is these days, are you trading as normal or do you have a more risk-off approach? Oh, okay. Yeah, I understand you now. I'm trading as normal because normal for me isn't sitting there day trading. So although I'm in my trading room with my members every day and we do certain sessions through the day, um, I don't really day trade anymore. I know I've done a lot of day trading in the past and won trading competitions and things like that over the years, but it just doesn't interest me anymore. As I've got older, I don't want to be tied to the screen, so to speak, when you start doing that sort of thing. So it was fine years ago, but yeah, I just prefer swing trading in the main. So therefore, does this volatility affect me or change anything? Not really. It might mean that I'm putting a couple more swing trades on because the markets are moving around a fair bit, but no, otherwise no. Right. So back to Lime Biscuit. What's your target for annual returns, and what should be a realistic target for retail traders? Um, oh God, it's the answer to that one. Lime Biscuit is really how long's a piece of string. So if we take CFD trading to start off with, so trading, if you're trading the FX markets or stock indices, that type of trading. So forget um, Bitcoin because and cryptos. I can't talk from experience there. So I've always said that a good retail trader has the ability to make 50 to 100% in a year. Does that mean that they're going to do that every year? Absolutely not. Um, but they have the ability to do that. Could it be that some years they do less? Well, let me actually go through something with you. So, funny enough, I've got a lot of senior traders as in my community. When I say senior traders, I mean people who have been trading 10 years and over. So I've got members who have been trading, 10 years, 15 years, 20 years, 33 years. I've got fund managers in my community as well. So it's a right old eclectic mix. Plus, we've just got people who have only been trading, a month or two or so. So it's a right old mix, really. But we do have a lot of experienced people. And one chap, um, he was some of my guys, I quite like them to come on the mic and do sessions here and there. It breaks it up because I'm on the mic so much, so it's quite nice for our other members to hear someone else sharing their experiences and stuff. And Al was talking the other day, and he was talking about his last 5 years of performance. And so I'll go through these 'cause I'm not giving any personal details away. But so the last 5 years, 55%. Oh God, what was it? The second year, 15%, 85%. Yeah, that's right. 83% and 33% was last year. Now, for for someone who's newer to trading, they might say, "Oh, that's not that much," or they might do. But that's a brilliant 5 year track record. And as you can see, you don't get the same returns every year, but that is a fantastic track record there. And so, and as you can see, it varies from year to year. So there's always, could it be that he could have made more in any one of these years? Of course, depending on what's going on during the year. Of course, there's always going to be subtleties that could change his performance. But that's great. Over 5 year track record. You ask any broker and you say, right, I've got a trader who's done this over 5 years. They'd say that is fantastic, because if anyone can over 5 years, every year put out positive performance, that's great. With a couple of outliers there, a couple of 83, 80s, 88, 80, whatever, 85, 83%, it's really good. Plus a 55 there and a 33. You make, your account is growing a lot, over 5 years. So now, can retail traders make more than that? Yeah, of course they can. That's why I do the trading challenges to show what can be done as well. Um, but even in the current trading challenge, which I updated in December, you can see it on here on the YouTube channel. You can see it's in the live broadcasts from December. I still had a long period where I didn't make any money, even though it was up like nearly 400% as of the end of last year. So you're going to have periods where you're making, really good gains and periods when you're not. That's just the realities of it. So can you make more than these? Yes, you can. Can you make less than these? Absolutely, you can. So, but it really comes down to the individual, as to, of course, as to how the performance is going to be. Imagine having Charlie as your maths teacher at school. Yeah, exactly. Yeah. So, yeah, there you go. Hopefully that answers your question there. Oh, I don't know where he's gone. Concept, because it really is a difficult question to answer. And another thing that I'll add, and another thing that really annoys me, um, and it's again, it's that people assume that day traders make more money than swing traders. That is a right old bugbear of mine, because it's just not true. People just assume the more you trade means that the more money you make, and it doesn't quite work that way. So you might trade more regularly, and it might, if you do day trade, so it might mean that your returns are, come about in a different way. But usually over a course of a year, if you go on that reasoning, those results were all from swing trading. So on that reasoning, if that same person, Al, was day trading, which is obviously so much more frequent, then he'd be doing 500% a year every year. And that's just not realistic. It's not, I'm not saying that you can't do 500% a year or more, but that all comes back down to how much you're risking and what the markets are doing. In the main, from my relationships with my brokers and my asset managers, in the main, that sort of stuff doesn't, if it does happen, and you do see it more so with people with very small accounts as well. I think that when people are trading on small accounts, they very often take bigger risks. So you do hear a lot of the time, if someone's got $1,000 in an account, they'll turn it into 5,000. You're like, well, that's 500% right there, or 400%, or they'll turn it into 10,000. But they are taking bigger risks, and if they carry on trading with those bigger risks, then um, they're also at risk of giving it back as well. So that, again, there's a double-edged sword there. So it's about trying to find that return in relation to how much you're risking. So Alan there, those results are based on him risking up to 1% per trade as a risk. So just so you know. Okay. Exactly. There's a lot to be said for swing trading, as you've just said. Less stress. It's less intensive. Lots of people do find intraday trading can be, that they do find it stressful. But don't get me wrong. I don't want to put people off, because there are plenty of people who love day trading and are very good at it, but they tend to be experienced traders. My advice would be that anyone who's been trading less than a year or two hasn't earned the right to be able to day trade, because until you've been trading for a couple of years, you haven't built that psychological um, thick skin in order to deal with the knockbacks and all the other stuff that goes on in the markets when you're trading, because you're always going to have losing trades and frustration periods and all of that. And those periods are more intensive if you're day trading. So I would always say to anyone who's trading only a year or so, swing trade first. It is less stressful, and there's much less psychological things going on when you're. I'm not saying that there's still not a lot of mindset, because there still is, but you don't have that intensity of someone sitting there looking at a 1 minute chart and seeing the market flying around and then saying, well, I've got to get into something. And then, and they trade on emotions. And so discipline and the ability to deal with all the things that are thrown at you. Someone who's been trading less than a year or even up to 2 years is got less experience to draw upon, and to therefore deal with all of that sort of stuff. So my advice wouldn't be for anybody new to go down the path of day trading. But of course, on YouTube and TikTok and all these social media platforms, there's people out there talking about all that sort of stuff, because they're telling people what they want to hear, not what they don't want to hear. I'm more interested in telling people what they don't want to hear. And so that's just the way it is. Right, trying to catch up with stuff here. Let me just scroll back, because I may. Uh, I don't want to make sure. I want to make sure I'm not missing anyone here. Bogdan, I think. Bogdan's saying correlations surely matter as part of a system, but lately there have been some anomalies. Euro GU going negative zero point 0.7 on the 1 hour time frame. Correlations come and go. So Bogdan, I'm not a correlations per se trader. So I'm looking at the correlations, but not because I know that if I'm trading, for argument's sake, euro dollar on the long side, I know that I need to be making sure that the pound dollar is generally going up as well, and and the Aussie and the Kiwi generally are, so those are simple correlations. I'm not a correlations trader, so I can't really answer what you're saying there. Right. You asked because having a clear rules would help me with mindset. No, it won't, Marco. Honestly, you need to get over this. um, clear rules will not help you with mindset. The mindset side of trading will still come and bite you. I can tell you that now. I appreciate what you're saying, that it logically it makes sense. If you've got a clear set of rules, then it's easier. It is until you start having losing trades, or trades that nearly get to the target and roll back over, and all the various different things that go on. Bad trade fills, slippage maybe. um, you're still going to have a lot to deal with. So, the problem that you get with mechanical trading is, like I've said, is when your mechanical trading strategy goes through a choppy period, you will naturally start to hesitate and start cherry picking trades. I can guarantee that to you right now. So, no, it doesn't make it easier on the mindset. The mindset is something you absolutely 100% need to work on. That will help you, yes, with the mechanical trading, but it still won't be everything. And I can tell you again that there is no substitute for experience. Unfortunately, you just got to do it. I don't think that mechanical trading is the holy grail, because it's not. You almost need to say, right, I'm going to do this because I want to do the 1 + 2 = 3 method. But I also accept that there's going to be, I might be have a mechanical system that, or straight strategy, which was great in back testing, works well for 2 months, and then completely falls apart. And then I'm going to have to find another one. And what you find is that people become strategy hoppers. They hop from one to another as those strategies fails. Because just remember, most mechanical trading strategies do fail over time. So, you know, because like I've said, the markets aren't that simple. There's more to it than just 1 + 2 = 3. So, well, subjective decisions, you're right. They are. That's where the skill comes in, and this is what I'm saying to people: roll your sleeves up and get dirty and accept that it's going to take time. The problem is, we live in this culture of people wanting to get rich as quick as possible, don't we? They want to just give me a strategy that I can just take away and start trading and making money straight away. It might do for a while, but it's likely it's going to fall over at some point. Then how do you deal with it if you haven't got the experience? So, you're going to have to cut your teeth with it. I'm just warning you. You'll remember this conversation. I'm trying to help you out here, that it's not a holy grail answer. I prefer subjective trading. Technical analysis combined with strategies, then multiple time frame analysis, bit of sentiment analysis, intermarket analysis, and then having a strategy to apply in line with that analysis. Yes, to a brand new trader, they'll be like, I don't know how to do that. Yeah, I know. That's going to take you time, and that's what I do, all of the time. So, yeah, it's not an easy, quick fix, unfortunately. Hopefully, I'm helping anyway. Is swing trading much more profitable than day trading? Is that why you trade like that now? Oh, yeah, that was written a while ago, Stephen. Or Stephen, sorry. So I've probably already answered that. I don't know. It's not necessarily that swing trading is more profitable than day trading, but the stats are not good for day traders. Experienced day traders, people who've been at it years, yes, that's fine. But people who get into day trading, the stats are of people who become successful, who go down that route first of all, are very, very low. And so, but if you're an experienced trader, if you've got two experienced traders, one who's swing trading and one who's day trading, I think they have the ability to make the same sorts of gains. It's not that one's better than another. My member, who's a 33-year, like I said, bond trading veteran, ex-City trader, he does do a reasonable amount of day trading, but he massively reduces his position size. So so it's sort of offsetting, because he'll take very small positions, because of, otherwise, if you're risking 1% per trade or 2% per trade, and you're going to have, 3 or 4 losing trades in a single day, that can affect you. And and do you want that on your account in just in one day? That kind of volatility. So there's a lot of things going on that professional traders like him, well, he massively reduces his risk per trade down. So then that offsets the fact that yes, he can have some great runs, and he does. Of course, he does. He's a pro, but it is with smaller amounts because he doesn't want to take those bigger risks on intraday like that. So in the main, it tends to even itself out. It's just how the gains come about a little bit. But and then it comes down to lifestyle. Well, if you want to sit there in front of your screens for a certain amount of hours per day and all the things that go with that, then fine. But I've been there and done it, and I'm quite happy to be able to just put swing trades on. And there's still a lot of management that goes on, but I'm not having to, jump out of the shower because the markets have flown, and I don't want to miss out on an opportunity. And that sort of thing used to happen because, it might be your one setup of the morning. You're like, oh God, markets have flown. I'm supposed to be getting in on this, and it's all gone while I've been, there's all sorts of things go on. So, but it's personal choice, and but all I can say is that please, if you've been trading probably less than 2 years, it's not the right path. Once you've built up the experience and, like I said, the thick, hard skin of dealing with the markets, then you're better prepared for intraday trading. So, but yeah, people feel like they should go to intraday because there's more going on. They want to feel like they're doing more, don't we? As human beings, it's difficult for us to sit there and say, "Yeah, I've been in one trade this week." It's difficult for people, but that just comes with time and experience, really. Please, how can I trade UK stocks in the UK with a small account portfolio? I don't know because I don't really trade stocks conscious. Just go to brokers, and there's plenty of brokers who offer stock trading. So and countless brokers. So just that's quite easy. Just go to I don't know, any of the big CFD brokers, and you can trade for them. You can trade for them through spread betting if you want to do that, but it's not genuine. But if you only got a small account, then and I'm assuming that that's what you're talking about doing, rather than actually buying shares, themselves. Any experienced options traders in your group? Not that I know of. Concept. It's not something that I do personally. There probably are one or two, but they tend to keep it to themselves if they are doing it. So, like I said, I've got a couple of fund managers there. I've got a chap who runs a family office in America, and then I've got another one out in the Middle East. The guy in the Middle East doesn't trade options, but I don't know about the chap in America, so I don't know. Dean's asking, what sort of timeframes am I looking at for swing trading? That's a good question, because again, people assume that swing trading, you're looking at daily charts, which of course, I am looking at. But of course, we can, I can swing trade off of an entry that I've got in off of a 2 hour time frame. So I am I am looking at the intraday charts, but not necessarily a 5 minute chart. But I will come down to the hourlies and 2 hourlies, 4 hourly charts, 8 hour charts, 12 hour charts. So that's a number just going up to the dailies. If I'm looking for an entry opportunity. So yeah, it doesn't always have to be only looking at a daily time frame. There are these, and I've got quite a few of my members, do spend a lot of time trading off of 2 hour charts, 4 hour charts, 6 hour charts, and they might only stay in a swing trade for a few days to maybe a week or so. So that's quite a nice time frame for a lot of traders. Personally, I love the swing trades where if I can get into it and hold it for a month or two. I quite like those, But that, again, it's personal preference, isn't it? So, um, but within my members, they're all using the same tools, just on different time frames and different markets that they may be trading. So we all collectively have got the same tools available to us, but it's what your personal preference is. Like if someone, like I have members who are trading, Bitcoin quite regularly, for example, and I have other members who love trading the Dow, or the DAX or whatever. So it's a real variety. It just comes down to people's personal preference, really. If you didn't day trade, I'd feel guilty. Yeah, okay, and that I am not making the money to work. Yeah, absolutely, Marco. I totally get where you're coming from. That's a classic um, reaction from someone. Yeah, I'd be okay as long as my day trading didn't make me lose money and it was a net zero while my swings take care of gains. Um, yeah, if you didn't, you'd feel guilty. Yeah, I mean, feelings of guilt for traders, people when people get into trading, that's quite common, because they feel like, well, you get traders who feel guilty for making money. Remember, we, come across a lot of people who feel guilty making money because at the end of the day, we're just clicking these crude devices, aren't we? Our mouse, you know. Um, And so some people have genuine issues with that. But you're not talking about that. You're talking about feeling guilty, if because you feel like you're not doing enough if you swing trade. Marco, I'm really sorry. I'm going to say this. I think you've got some really big issues and some really big problems coming your way. But that is normal for people in the markets. But your mindset is a beginner's mindset, and I'm just trying to help you a little bit. I can't spend too much time. This is a general chat. I want to answer everyone's questions, but you are setting yourself up for quite some failures, which is not a bad thing. As long as you keep your risks low, you will lose money, Marco, because of your mindset. But everybody has that type of mindset when they start out. So don't feel like, oh God. And I'm not trying to antagonize you. I'm actually trying to give you some warnings. So because if everybody who got into trading did it the right way, which most people when they get into trading, myself included, when I started 25 years ago, um, then we'd have more traders. What happens is most people get into trading, give it a try for 6 months, a year or so, maybe a couple of years even, and then they quit because they never make it because they go down the wrong path. One of those paths is that they obsess with strategies and they end up becoming strategy hoppers until they give up. I literally had someone yesterday email in saying that he's been trading for 4 years and that he's gone from strategy to strategy to strategy, and eventually every one of them fails. And he's on the verge of giving up 4 years in. Now that's a shame, but it's just because he's gone down the wrong route. But everyone has to get to that light bulb moment of saying, okay, am I on the wrong path here? In which case, what do I need to change in order to get onto the right path? And I can't tell an absolute beginner this because an absolute beginner, sometimes they just need to find out for themselves. Go away, lose some money, then come back to me. And that's what I say to people. Go away, lose some money for 6 months, then maybe you're ready to really learn. So anyway, is it easier to swing trade in the stock market versus FX, since the FX markets moves up and more up and down? Um, I think it's personal preference. Good question there. Well, let's have a look at the stock market a little bit. So let's go to the likes of the S&P here. Um, you know, that's moving up and down a lot. That's the stock index, but stocks do move up and down. The other thing with trading stocks is, again, you've really got to know your stuff because they gap. And again, I get plenty of people who say, "Oh yeah, I used to trade stocks, but they gap a lot and they gap down against you. So then you get slippage on your where your stop loss is, and where you get filled is in a different location to where your stop is. So it's a very technical thing to do as well. So in theory, yes, when the stock markets are in a bull market, it's in theory easy money, so to speak, because you buy and then just let it and everything's going up. But um, it is quite technical as well. I don't think there's any easy route to trading, whether you're trading stocks or FX or indexes or whatever. It's all hard. It is. So there you go. Can you look at Aussie yen on the quarterly chart? There looks like a big wedge going on to 1990. Is this worth keeping an eye on? Okay, let's go and have a look at the Aussie yen. I probably haven't got the Aussie yen in my watch list here. I'm just having a quick look. No, I'll just add it in. Now the only thing is here, Michael. What feed are you using on that? Because these won't go back to 1990. I wouldn't have thought these feeds. Let's have a look here. Have I got? I can't see any feeds here that will go back to 1990, Michael. Unless, because I know that Michael, I thought you use TradingView. You see, so I can't see any feeds on here on TradingView that will go back to 1990. But I'll tell you what I'll do. I'll pull out my trusty e-signal. Why didn't I do that? Let me just get this set up first of all. Aussie yen. Let's click on that, then go. Quarterly chart. Oh, okay. That goes back to 1990. Let's go back to the question. Quarterly chart that looks like a big wedge going back to 1990. Is it worth keeping an eye on for a swing long? I don't know. It looks like just a big old range to me. I could put a trend line on. Yeah, I could put a trend line. Across the. Where's my trend line tool? I haven't. I'm getting rid of e-signal. I'm not really using it much these days. It's amazing, isn't it? I've used e-signal for years, but I've gotten more and more used to TradingView. Where's my trend line tool gone? See, I've forgotten. It's on here somewhere. No, I don't know. Forgotten the trend. Oh, there it is. So yeah, maybe you're putting something like that there, and as you can tell, I'm not looking at this chart and seeing and getting that excited about this chart particularly. So yeah, sorry, Michael, it's really not. I'd rather just say if I can't really see much, you're seeing something that I'm not, so that's fine. And that's what analysis is all about. But I'm not really seeing. There's not really that much that I'm. It's not exciting me, so I'll have to leave that. But it doesn't mean to say it's not good for you. But I just have to say if nothing stands out for me, then I say. Can you share your experience with AI in trading? Has AI already overtaken humans? Um, um, well, automation has overtaken humans years ago, Stephen. When I started trading in the 90s, there was all this talk about automation and that it was going to take over, and that um, automated trading systems are going to rule the world and everything else. And they had these same conversations in the 1980s, the 1990s, the 2000s. And yes, if you look at the figures, then automated trading makes up, by in percentage terms, way over 50% of entire trading volumes. But that is because it's the big boys, the banks and the big hedge funds, so that are using that. So now that's automation. AI obviously will comes along with that, but we've had AI in automated trading systems for some time. Machine learning, and there are some incredible systems out there, but they are for the big boys who've got big pockets, who've got the money to invest in quants and the likes. um, the average retail trader does not have access to that type of technology anyway, but it's not worth worrying about. There's been, automation's been around since, the 25 years I've been doing this. There's always been these, concerns. Oh God, is automation going to take over? And no, there's still plenty of space for us to trade. The automation's doing its own thing. So no, I don't see it as anything other than that. Okay, Marco, right. I'll answer your second question first. That's much better. Alex, the interviewer at UK Spread Betting, well, yeah, she's a lovely lady. She's married to an ex-professional rugby player, just so you know. And so big man. So, you know, don't go there. But yeah, she's lovely, Alex. Yeah, really nice. How much better of a trader do I need to be to day trade? You're obsessing about day trading. It's not good. This whole obsession about day trading, forget it. No, I don't want you to forget it. But I'm just giving you some warnings of, look, I'm just saying that statistically it's going to be tough. Don't expect to make money from it. So, manage your cash and all of that, and expect to lose. So, but I would say expect to lose in swing trading as well. But when you're on brand new, but it's just that it's so much more intensified when you day trade. So that's the risk. That's the big risk. And so the potential to revenge trade and over trade and is so much greater if you go down the day trading route. But no, don't let me stop you. It doesn't look like I'm going to. But how much better do you need to be? It's not necessarily a skill set. The problem with trading is that there's there's soft skills in trading, and it's not like going to university and learning something and then you have a degree at the end of it. The amount of traders who I've come across over the years, who are doctors, vets, airline pilots, some top professions, and every single one of them, without fail, has said trading is the hardest thing I've ever done. And these are highly intelligent people. So unfortunately, it's not as simple as learning 1 + 2 = 3. There's so many more soft skills that you need to learn. So how much better do you need to be a day trader over than a swing? It's the soft skills, it's the mindset. And you can't learn mindset by just reading a book. You have to experience it, and the only way to experience it is time, unfortunately. And so you're going to have to go through all of that, work on it as you're going along, but unfortunately you're going to have to learn it as you go along, and hopefully you don't blow up your account in the meantime. And I'm being brutally honest. But you go down that day trading route and you might have the best of intentions, but you might still end up blowing your account up because of the risks there for someone who's new going down that route. Anyway, there you go. That's those questions done again. Experience screen time and learning from mistakes. Yeah, absolutely. Concept. Yeah. Uh, Love Preet. Okay, you've got a question. Razvan. Hi, Raz. Do you believe that Eurodollar will enter a consolidation phase? I don't believe anything. Oops, what's happened to the? Let's go to the Eurodollar. Um, any market can go into a consolidation. You can't predict necessarily when a market's going to go into a consolidation phase or when it's about to and have a, a fantastic run. So there's no point going down that route really. You just trade what you see in front of you rather than thinking, oh, it could go in a consolidation phase or it could go the other way or whatever. If you've got setups and you've got analysis, then you just trade your analysis, because we can't tell that in advance when a market is going to go into a consolidation or not. We can't. No one can. So you just take your trades as they come along on the back of your analysis or your strategy, and that's it. I was talking earlier on today, actually, with my traders. I was talking about a trade. I was given some examples, and one of the examples was gold back in 2015, and we got into a trade on gold, and then it just went sideways for 8 weeks. you know, you can't tell. You can't tell that that's going to happen. If I did, then I wouldn't have got into it and then had to have sat in it for 8 weeks. It ended up being a great trade, but it tests your patience when that sort of thing happens. So yeah. If you've got a holy grail, by all means give it to me, and I'll know then in advance. um, Please, what about Forex? What would you recommend for a small account in UK? You keep on asking this. Are you asking I think you're asking conscious trader. I think you're asking to recommend brokers. Yeah, I do like Pepperstone. I like markets.com. I've got a good relationship with them as well. The problem with markets.com, if you just go direct to their site, their spreads and their swap fees and stuff aren't the most competitive. They do myself and my members a special deal on their charges, so we do get better, good um, fees and stuff. So so in that on that basis, I'd say just go straight to Pepperstone. They're really good. Um, I like the way Rahul, you explain things in a more transparent way. Looking forward to joining you. Oh, that's very nice. To learn more on the risk and trade. Yep. Well, we'll welcome you. We have new people joining us all the time, Rahul. So as and when you want to come in, it's always available to you. Oh, thank you, Marco. Yes, absolutely. Yep. Uh, okay, Lime had to go. That's nice him saying that he sadly has to go to work. And concept 1% better each day. Learn from your mistakes. Yeah, absolutely. Yeah. Um, the learning the soft skills, we can, and technical skills. Logging trades is really important. Coming back to Marco or anyone else who's newer there, keeping a trade journal or spreadsheets, and logging your trades is really important. Not just the act of logging them, the date, the time, the entry, and all of that stuff, but also making notes on what happened with the trade, and then doing a monthly review, because we very quickly forget our trades. So going back and reviewing our trades at the end of the month. Let me give you an example. Let's say you get to the end of the month and you're down 5%. I'm just making stuff up. So you look at your P&L, you're like, well, oh no, that was a terrible month. I lost 5%. Okay, well, let's say in a sliding doors world, your other self on the other side of the sliding doors actually did exactly the same trades, was down 5%, but actually kept a trade journal on a spreadsheet or whatever. And they documented everything and they reviewed at the end of the month. And they go through everything and they realize that actually, I know, one or two trades in there, I just got stopped out and it just ended up going higher. And actually, it was just, I was a bit unlucky on a couple of those trades. And if I hadn't have been a little bit unlucky, actually, it wouldn't have been 5% down. It would have been 2% up, let's say. And so by journaling and reviewing your trades, it helps is a learning tool, a bit like a mentor would do. If they were sat with you, they'd say, right, okay, let's talk me through all of your trades. That's what you're doing when you journal and you then review. Because the person who's been down 5% is just going to see their P&L and be disappointed. But actually you can be encouraged because you go through all of those trades. You say, actually, I've been doing a lot of the right things. I've probably just been a little bit unlucky here. There's nothing for me to change. If I carry on following my processes like this, it's likely that next month or the month after, I'm going to have some really good months. You see how the subtleties start to come in between a trader who just reacts emotionally to every little move in their P&L, as opposed to another trader who is looking not so much at the P&L, but whether they're doing the right things. And that's a big difference. Following and focusing on your processes and getting those right. We can't control whether a trade is going to be profitable or not. We have no control over that. So what we do have control over is following our strategy, yes, and our processes, whatever those processes are, our trading plan, all those things we can control. If we start deviating from our plan, then that can affect of course, our overall profitability. So just a little tip there. Yeah, Dean's saying losing trades is just part of doing business in the markets. Accept it and move on. Yeah, absolutely. Losing trades do not make you a loser. No, if anything, embrace lose. I always say embrace losing trades. Out of 100 trades, if you let's say you've got a 50% win rate, well, it means you're going to be wrong 50% of the time. So get used to it, expect it, and embrace it. There's no point shying away from them because again they're a natural part of the process of trading. So but trust in your approach. One of the big bugbears that I have is this obsession with newer traders. It tends to be, but even people who've been trading up to 5 years or so, this obsession with being right as much as possible, having a high win rate, and they obsess about having a high win rate, not about the overall profitability, because they just want to be right as much as possible. And yet you can have I've got a trader in I've got plenty of traders who do this, but one of my members, he has a win rate of around 30%, and yet he's mega successful. And he's only right 30% of the time. I'm not saying that everyone should go down to that level, because that he trades quite aggressively with his stop losses, so he gets lots of stop outs. But he's okay with that because he's got a thick skin and he's experienced. But I wish that more people didn't obsess about having a 70 or 80% success rate, and but I guess that's the nature of the beast. I was most likely like that myself when I started, but if I can offer advice, then yeah, think about the profitability, the most profitable approach that you can have with your strategy or your approach or your method, rather than trying to create it in a way that it's right the most of the time. So oh, it's pro real time, was it, Michael? Right, okay. Yeah, Dean, right. So I'm trying to catch up with all the comments here. So I am catching up. Jens is saying, to continue the stock question, why do you think there's so many more stock traders out there with verified trading results compared to? I don't know, Jens. I have been around for 10 years, and every Forex educator I come across rarely share their trading gains, while stock traders show them with no hesitations. I don't know that at all, Jens. Are you in the States? Because, firstly, um, uh, stock trading is much more popular in America. It's part of their culture because in America, um, people's have to manage their pension money a lot more and stuff like that. So a lot of people have you're watching, I don't know, a normal TV program in America, and there's ticker tape going along the bottom of the screen. Anyone who's been on, out to the States, so it's part of their culture a lot more. And so, but loads of people lose money trading in stocks. So I don't, it's the same, Jens. And I don't know who you're talking about, but it's exactly the same. There's loads of charlatans in stock trading as well. Stock markets go up and stock markets go down, and stocks gap and everything else. There's plenty of charlatan educators in stock trading. But you're right, there's plenty of charlatan educators in cryptocurrencies, in stock index trading, in forex trading, anywhere where there's money. It's the same in property as well. There's plenty of educators in property so so I don't know if that's true, Jens. I always show, that's why I do my I constantly do these trading challenges for that very reason, Jens. And I have funds, so people can go and check out my funds if they want to. So, um, but I agree that most educators don't, because most educators are not. I would say that a large majority of educators are not genuine, but I would say that's the case in any one of those disciplines. Attard, how are you? How do you trade less and still keep the gains the same? Um, yeah, it's a good question. So if you're trading less, how do you keep the gains, or how do you make the gains? Well, when you're trading less, you tend to be looking for bigger gains when you are. So that's what I'm doing. So I'm, like I said earlier on, I'm not looking to necessarily get in and out after 3 days or 4 days. Some trades are like that, but I'm often trying to get into a trade that I'm looking to try and run for a month or maybe even longer. And so therefore the risks to rewards tend to be bigger. Plus I add in, as on those trades that are going in my direction, I add in as they go in my direction. So I'm increasing the intensity of the trade, so to speak, the potential end result, because I'm not just getting in here and getting out here. I'm getting in here, and then once it goes up to here, I'm adding some more, and once it goes up to here, I'm adding some more. So by the time it gets up to here, it becomes a much bigger trade. So that's why. That's how. Uh, okay, Michael. Yep. Okay. Range bound. Yep. Um, yes, space. Yeah. Thank you for that. Marco. Yeah, she was your muse and only wanted to become a good trader to be interviewed by her. Okay. Did did you take many breaks the first couple of years? Reset and started again whilst working your normal job? I did take a break concept because in my first year I lost a load of money. I blew up an account. I turned an account from 40,000 into 240,000 and then blew it all up because I didn't know what I was doing. And I think I took like a month, maybe two off. I don't even know if it was that long, but certainly I'm pretty sure I had like a month off of trading. I was working anyway. Trading was on the side from work, so yeah. I took time out then, but I've never taken any time out since then. No. Um, Trading, I live and breathe like many of you. I live and breathe trading. It walks with me through my life. So I always find it funny when people say, "Oh, you go on a holiday and have a break." Um, I don't find trading stressful, so why do I want to have a break from it? When I'm on holiday, I still want to be running swing trades. I'm not going to be checking the markets as regularly when I'm on holiday. But if there's a trade that I'm already in, I'm not going to close it out because I'm going on holiday. And I will still keep an eye on the markets, because just because I'm on holiday doesn't mean to say there might not be some half decent, trading opportunities. So depends on what I'm doing. Last year I went to the States and we were hiking up and down mountains a lot on this trip for just under 3 weeks. And so, and what with the time zone differences as well, by the time we were up in the morning, the London market had already, we're already well into the afternoon session. Not that affects swing trading, but but because I was quite often getting up at 6 a.m. on the holiday and then getting ready and going out on a hike. I'd be out on a trail by 7 a.m. some mornings, 7:30. One morning it was 4 a.m. we started the hike. So I wasn't checking the markets as much because I was enjoying it. Just so happened that we were very busy. But I was still in trades even then, just less intensively yet. You want to play a piano or guitar, reading a book or watching YouTube? Get your money in the markets and learn. Yeah, yeah, no, that's a good point. Um, while journaling, I get more addicted to the process and not the outcome. That's so good to hear. Concept. That's really good to hear. Did I also journal my emotions through the years? No, because I didn't really come across. I wasn't journaling in my early years. Concept. So I didn't have the I didn't have a guide in my early years. Everything was self-taught. Um, so by the time I'd got to a point of logging trades, um, I was already quite hardened from an emotional perspective. But I do agree that it's a good thing to do, to log your emotions as well. I agree. If you could single out one, what's your best trade ever, and what's your favorite trade of your life? Oh, well, that's the same thing, isn't it? Um, okay, yeah, all right, I've got it. I've got it. I was trying to think what it was there. Um, there's a number of trades that I've that stand out, have stood out over the years. And the funny thing is, I can't remember any particularly. I do remember some day trades, but none of them are going to be, what's your best trade ever? It's never going to be an old day trade. I don't remember as many day trades. I remember a few standout ones that I've taken, especially when I've been in a trading competition. I've remembered those, but no, they've always been swing trades because swing trades are bigger. And there's two examples I'll give you. One was on the S&P, and I'm going to. How's the S&P? Still, yeah, having a great run here today. Uh, what time are we at? Okay. Um, One was actually on the S&P in the September of, where is it? Oh yeah, there we are. 2014. So it was this move here. It was a short, and I ran it down to about where the line is, not right away down to here, but down to there. And I'd got in somewhere up here. And this trade always stands out for me. That was in 2014, I think it was, um, because that was my first £100,000. Oops, £100,000 profit trade. It was £115,000 I made on that trade. So that one I'll always remember because that was my first six-figure trade. In answer to that question, but another standout trade. What have you said? What was your best trade ever and your favorite trade? Oh, I see. Your best versus your favorite. I'd still say one of my favorite trade ever, and I've got a load, but would still be that trade that there was, yeah, there's been some great ones through here, but um, 2000. think this is it here. Yeah, there we go. My favorite trade, I would still say, is this trade here in 2017. I was in and out of it, but a bit as we came up and down and up and down, and then eventually I didn't get out right up here. I was out at around 114. So the trade for me was over around here, not the rest of that. That was my target for the trade as a whole. That trade lasted around on and off 6 months. I think I held on to a a core position, but then I banked profits. I certainly banked profits here. Then got back in down in this zone, banked some more up in this zone. And genuinely, this is why it's a favorite trade of mine, because it wasn't easy. You look back and you think, oh, that was easy. No, it wasn't. It was really tough. Then saw it come back down again, started adding in this zone here. Yeah, somewhere down there. Oh no. Then I had to bank some profits because it was the French presidential election when Macron got elected. Then added in once we gapped up. Everyone was talking about shorting for the gap fill, and so I did the opposite and went long, and then ended up. I'd still had a position through that, but and then ran the rest of that for around about 114 was my final target. So yeah, there was just a lot of stuff going on there. That was, from a market sentiment perspective, there was all sorts going on. So there you go. That's the answer to that. Okay. Wow, great question there from Space Ghost, saying Space Ghost is saying, what type of things do you do in your day-to-day life to maintain your mental stability or emotional control? I think one thing in relation to this space, and I always say this, and I've said it tonight already, but there's no substitute for experience. I think the more experience you get, then you um, you get better from an emotional perspective with regards to trading. Um, I work on my mindset all of the time, and that mindset work comes from a lot of repetition, a lot of forward planning. If the market does this, I could do this, and mapping out, a bit like a snooker player planning 4 shots ahead. It's that type of thing, and constantly reviewing that. Even if I am in a profitable trade, um, what the market may do. Oh, it could pull back to here before then still going higher, or it could completely, of course, roll over, and constantly mapping all of those things out so that so my brain is ready for any potential scenario that could happen. So um, and it's the same with analysis. I don't just do a piece of analysis and say, all right, yes, that's it. I'm now, bullish dollar yen. You go over it again and again and again. And even once you're in the trade, you go over it again and again and again. All that stuff helps from a mindset perspective. But is there anything in my day-to-day life, in answer to your question? I don't feel that I need particularly to do anything in relation to trading, because like I've just said, I do genuinely, I'm that is the thing that I love, is the mindset aspect of trading. So I love that. But just from a balance perspective, as far as, like, I like a bit of exercise, so in that regard, like a lot of people do, a lot of people have hobbies and interests. And so in the main, yeah, I'd like to do a bit of exercise. It makes me feel good, like many people. So nothing major. I don't need um, I don't need to do exercise to give me emotional control in trading. I do exercise because I just like feeling generally good. I spend a lot of time sat down. So I was training at the gym with my personal trainer today, and I enjoy the endorphins from exercise. I don't do huge amounts, but I train 3 or 4 times a week, and that's important to me on a day-to-day basis. And of course, as we go through the year, I like going skiing in the winter, and I have other hobbies. But day to day, then on normal weeks, then I go to the gym like many people do, or people swim, or they do CrossFit or whatever. Then that's what I do. Oh, thanks, Jens. That's good to know. I appreciate that. Aaron, love the content. How did you manage to keep down a full-time job and manage to be profitable? I'm struggling to do this. Fun enough, coming back to Jen's thing, I used to trade stocks. So- but that's true. My early days, I used to trade stock, swing trade stocks back then. But yeah, when I was early trading, I would be buying stocks and holding them for months. So your stop losses were a lot further away because I was buying stocks unleveraged. So I'd buy, I'm trying to remember now, it'd be like a few hundred shares of a particular share stock, depending on the price of the stock. Um, and so the stop losses were a decent distance away. And so it's not the same as in the shorter term trading I do in FX and stock indices these days. But you would still get stopped. But, especially if all of a sudden the markets do a bit of a correction. But, I was writing options against those as well. So I was doing options back then. What was the question again? um, yeah, it didn't. So it didn't require a huge amount of work. But yeah, I mean, I was single back then, and in the evenings I would do my research, and so yeah. But it does take time up, and if you've got a family and other commitments, then yes, it does. It does get in the way. The advice I would say to you is get up out of bed half an hour or so earlier so that you can check the markets before you go to work and commit to sitting down every day for half an hour in the evening. Um, and I would say to that, create a habit there, and that can certainly help with staying engaged with the markets. I backtest a strategy and it works, and then suddenly it doesn't. So I lose confidence in the strategy, and then I find another. Um, I I backtest strategies and they work, and for some reason they stop working. So I lose confidence. Why do you think this happens? This comes back, and I don't know if he's still here, to Marco. It's exactly what I was saying to Marco earlier on. And what you end up having is strategy hoppers. It's not nothing necessarily you're doing wrong, Kartik. That's just the reality of the markets. And this is why I say I don't believe in mechanical trading. The markets aren't that simple. When you back test a strategy, you're back testing something over, let's say, the last 10 years, but it's still over a historical piece of data. There's no guarantees that it's going to work in the same way in the next 10 years, and it's highly likely it won't if you try to mechanically trade it. So the missing piece of the jigsaw is for you to do technical analysis and use your mechanical strategy, but you use it in the right context. That requires a bit more work. And people don't want that. People just want to have a strategy that's going to give them a given return. But that's a very, very common thing that goes on. People backtest something, it works historically. Maybe it works for a shortish period of time once they start actually trading with it, and then it just fizzles away. That's exactly what I was saying to Marco earlier on. So yeah, it's because it's back tested over previous periods. It's no guarantee that the future pricing is going to be the same as the past. Attard, yes, yes, it's a bit more complicated than that. Attard, but I'll go with yes. There's all sorts of things that I do when it comes to adding to positions, but yeah. Guest house. Oh, that's very kind. I didn't even know there was a like thing. Right. Do you think you changed a lot as a person from when you started trading to now? Oh, absolutely. Concept. Good, great question. Um, yeah, and I'm getting back to the. Okay, Marco, you making notes? Yeah, I think everybody changes. What the word I use, concept, is you evolve. We all evolve as traders. I evolved, and we all have our own personal journey. And it was really around 2015 that I really started to just want to um, swing trade. I was still day trading but it was more that I was doing it for the sake of my customers. I was giving them what they wanted rather than what I wanted, you know? So I'd been swing trading as for years. After I didn't swing trade during the financial crisis because the volatility was so high. I was day trading then, but but again, you evolve, and I was I'm trying to think. I was in 2013. I was 40, and I think once I got to 40, you reflect a little bit. Didn't have any major moments, but I do sort of think, okay, it wasn't like I didn't just sit down one day because I was 40 and say, right, do I need to change how I trade? But I think it you just evolve, and I wanted to um, you know be doing more swing trading to give myself that time and buy myself time more. So, but different people do different things. There are people that trade the same amount of time that I trade and still love day trading. That's great, but you just do what is right for you. And for me, yes, I'm definitely different to how I was when I started, but it's changed over the years. I started in stocks, went to stock indices, traded stock indices, the S&P solely for years. I say solely, but it was like 80% of all my trading was the S&P. And then the rest was FX. And then towards the end of the financial crisis, I then started doing much more FX and less S&P, just because of the costs of trading S&P. Futures contracts, the futures brokers I was using. And I was thinking, FX is so cheap. Why don't I just trade FX? Spreads are tiny, no commissions, and so just decided to spend more of my efforts there. So we evolve through our trading. I was trading stocks right the way up to 2006, along with FX and indices, but I was still trading stocks. So yeah, you do evolve. Everyone has their own personal journey, and but one thing that I've learned as well. I've learned over the years what I think most traders should do, um, especially newer traders. Earn the right to be able to do all these other things, but I've just seen so many traders over the years and see all the mistakes they make. And so, and I've made mistakes myself from a coaching perspective. I can look back and think, yeah, I shouldn't have taught, beginners to day trade years ago because they weren't ready for it emotionally. But I, as a coach back then, you know, didn't have that experience as a coach to really understand what they were going through. So I've evolved as a trader and as a coach. I feel I'm a way better coach than I was 10, 15 years ago. But that's only natural anyway, isn't it? We all improve at what we do. Mechanical straight trading. Oh, sorry, no. Do you still find trading fulfilling even after all these years? Oh my God. Would love to hear the things you've learned and parallels you've found between trading and other fields. Um, Trading is, I would say, the most challenging thing you will ever do. So, in answer to your question, do I still find it fulfilling? Yeah, because it never gets any easier. You get better at dealing with all the stuff, and you've got all this experience and knowledge, but it's still tough. It's still tough. I'm looking at the markets at the moment, thinking they're tough, trying to get a read of all this information that's coming at us. It's tough, but that's great. I love the challenge of trying to decipher all of that. So, um, no 2 years are the same. So it is one of the most challenging things you'll ever do. So it will never not be fulfilling because it's constantly changing. And so, yeah. Parallels between trading and other fields. You might know that I came from I wouldn't say a sporting background, but I did sport at a reasonable high level for a number of years, and so I do draw a lot of parallels from sport. Do I think that sport helped me many years ago? Yes, I think it did in my earlier formative years as a trader. I think the tenacity to keep going. I did martial arts, so you you get tested as a when you do martial arts, you get kicked on the ground when you're tired, and they test you when you're doing gradings or competitions or whatever. So and you're tested to see if you get back up, and I think that stood me in good stead for trading because the market is going to knock you down and you've got to get back up. So there's some parallels there for you. I'm trying to work through these because I'm very conscious that we need to stop at some point. I'm nearly towards the end now. Um, do you think if a oh how many hours a day do you work, and do you rest on the weekend or prepare for a new trade? Um, I come into my office about 7 a.m. Between 7 a.m. and 8 a.m., the computer goes on. I'm already aware of what the markets are doing at that point. Um, but during that hour, I am having breakfast as well and feeding the dog and whatever. So, but that's when I come into my office. But I'm not sat here the whole time from 7 a.m. But I am here. I do check all the markets. I do a little 3 minute video for our members at around about 7:30, and then I ease my way into the day. So how long do I work? I don't know. Today's been quite a long day, but other days it's not always like that. But I do work a lot, but it's not all sat there necessarily trading because you've got to remember I do have a trading business as well, and I have funds that I manage. Now, the funds that I manage, as I said earlier on, the act of trading on them is not huge because I'm trading on them like I'm trading on my other accounts. But I do have. Yesterday I was on the phone to my broker for quite. We had a long conversation. So there are lots of other things that I have to do around. I'm not sitting here staring at the charts for 12 hours a day. It doesn't take that much analysis. But I am looking at my charts a lot during the day because I'm with my members a lot. But in between the times when I'm not on the headset with my members, then yeah, I have the business, the funds. There might be phone calls, that I have to have Zoom calls. There's all sorts. I was on a Zoom call to Iran earlier on today. Sam, my PA, I speak to her every day. There's so much that goes on when you're running a small business as well. So, but I do thrive on it, and I do really enjoy that variety. So, yeah. Anyway, there you go. How do you think if a set of max trades per week, 5 and a day, 2 in 2 sessions is a good idea or not to set these limits? Jost, oh, okay. I don't think it's a good idea to set limits, no, because the markets are a living, breathing entity. And you saying 5 trades a week and 2 trades per day, per, that you're putting limits and restrictions, and so therefore it might be that the markets don't give trades in those times that you're putting restrictions on. Then you go and miss the periods when there are. So I think you need to be a bit more fluent than that. But I love your second question. How long do you think forex will be available for to trade for retail? Well, hopefully for a long period to come, because it's forex trading is a large part of what I do. So hopefully, I don't have no indication at the moment that it's going anywhere. In 10 years, could it still be around? For retail traders, could we get to a point in 10 years' time where the regulatory authorities ban it because they don't want, you know, people, retail traders trading? Um, who knows? But just bear in mind that there's a huge industry. That means every broker would go out of business. So there's massive knock-on effects from that. But do I think that they could put more squeezes on retail traders as far as minimum criteria, and all that sort of stuff? Yes, I could think. I think that that could happen. It's not at the moment, but it could happen in the future. I don't know if it will, but I'm saying it could. We saw the authorities ban, for example, binary betting. Those you remember binary betting a few years back, that got banned. So now that was a different entity, but the authorities do worry about the average person who gets into trading the financial markets, whether it's forex, crypto, whatever. We've had people all around the world, committing suicide last year based on what's happened in their crypto portfolios. And the authorities don't want that. They don't want people blowing up their life savings by getting into trading, the DAX or Bitcoin or FX. So it's that nanny state to an extent, and they want to try and keep people protected to an extent. I know people don't want that, but it's because of the people who trade badly and blow their life savings and commit suicide and all these nasty stories we hear. That's the sort of thing that could evolve over the years to a point where the average retail trader won't be allowed in. Um, but that's quite a pessimistic thing. But anyone who's involved in the markets now is probably safe, because they would collapse an entire industry if they just said that's it, all retail traders are banned. So it would probably be new entrants wouldn't be allowed to come in or something like that. Anyway, uh, Hashem saying that every 1 to 2 months he blows an account. What advice? It's just about to blow an account. Yeah, loses control. Yeah, it's a discipline issue, Hashem, and so that's what you've got. So um, what will happen is you blow an account, you feel the pain of it, and then you start trading, and you probably trade with discipline for a while, for a month or two, and then in one day it all gets thrown out of the window and you blow up again. So it's because you're not continually working on your mindset. That's it. um, Mindset is covers so many things, and mindset covers discipline, as well, of course, not just the analysis side that I talked about earlier on. So you need to keep reminding yourself, if I do this next trade and it goes wrong, will I kick myself? Um, Other self language to use is, I can't afford to take this trade right now, because yes, it could go up, but if it goes right down, I'm going to blow my account. So you need to use a lot of self language and self talk to act as an arresting mechanism. I do a lot of this stuff in my community, um, but yeah, that's something you need to put arresting, psychological arresting mechanisms in play, because if you don't talk to yourself about this sort of stuff constantly, you'll just get so caught up in the moment. You pick up that mouse and you'll start clicking away again. So we need to stop it before we get to that point, and self-talk is really important. Um, Concept, you're easy to learn from and listen to, so a good mental teacher. Thank you, thank you. That's very kind. Um, do you think that anyone with at least average IQ and not overly emotional can eventually trade for a living, as long as he or she sticks to it? Yeah, you don't need to. You don't need to be highly intelligent. Average IQ, for anyone trading, is fine. Yeah. Then it just comes down to, Marco, capitalization. How much money have you got? You're not going to trade for a living on $1,000. You're not going to trade for a living on $10,000. So you then need to be realistic on get accruing enough money, if you want to trade for a living, to be able to do that. So, you know, what's the process of gaining private capital typically like? Is there drawdown rules? I think you're talking about my funds, maybe. I think. So, what's the process? I don't get involved in the process of gaining private capital, so I don't get involved in it. People just stumble across me, so I'm not out there actively trying to find that. Are there drawdown rules? Yes, I have drawdown rules. I have an overall cut off, like a hard stop on the entire funds and stuff like that. So yes. Um, how much cash would you say does a retail trader need to trade for a living? I knew that was question was going to come next. uh, um, you need to work ZZY. You need to work from the bottom up. The better answer is to say, how much do you need to live on? How much money per year do you live on? How much do you need to earn? Start that way round. So let's say you need to earn £30,000 a year. That's just to live on, and that's not a lot of money. You know, depends on where you live in the world. I don't know where you live in the world. Um, so it's difficult. That's why it depends on where you live in the world. You might live in Thailand and it's very cheap to live, and you can say, well, you can live like a king on $10,000 a year, sort of thing. I don't know, but only you know that answer. So once you have a figure, then you can work out how much money you need to have in a trading account in order to make that. So, for example, if it was £30,000 or dollars or euros per year, well, then you've got to think, well, if I want to earn £30,000 on average per year, um, do I still want to grow my account as well? So not withdraw everything from it. So maybe I actually need to be making 50,000 a year, so that I'm not taking everything out. Maybe a bit more than that even. And then from there you can work out how much capital you need, because you're not going to make £50,000 a year on a £10,000 account. Comes back to what we talked about earlier on about, realistic annualized returns. Realistic annualized returns, um, let's hover around the 50% mark. And some years will be lower than that. Some years might be more than that. But if you use that, and if you made 50% a year, you'd be in the top less than 1%. So you've got to account for years which are going to make less than that and more. So, and if by the time you account for all of that, you really start to work out you need quite a lot of money to trade for a living. Obviously, there'll be plenty of people on YouTube who will tell you that that's not the case, but they'll tell you that because they have a vested interest in, in getting you to maybe join them or whatever. I'm going to be brutally honest. I think most people shouldn't trade for a living. I know I've done it, and I've got a number of my trading members do it. The best thing that when it comes to trading for a living or trading full time, shall we say, the best thing you can do if you want to trade full time is to have another source of income. So don't try and trade for a living just purely from trading. It's psychologically really tough. You're going to have a losing month. What if you have a year where you only make 15%, let's say? And you're like, oh my God, I can't live off that. So the best thing you can do if you want a full-time trade is to have another source of income. Maybe from a business, maybe from your partner works, whatever it might be. Maybe you have some form of part-time job as well as trading full-time. I don't know, but I'm just giving you some advice. Please don't do it. And if you've got hundreds of thousands of dollars or and you're very well capitalized, it puts you in a much better position. But if you're not, and most people aren't, then they're just going to put themselves into a highly stressful position. So I don't mind people trading full time, but have another source of income also. And it might be from a partner or whatever, like I said. Um, okay, Stephen, thank you. Uh, there you go. Lives in Koh Samui and he lives like a king. Brilliant. I love that. um, and you're a quant as well, right? Fantastic. Quants, MM's loving life down there. Yes, great. ZZ, yeah, brilliant. Yeah, Harry, yeah, agreed. Yeah. Look, I've just about come there. Someone's just asked another question. There's always going to be other questions coming in. What do you think about smart money trading strategies? Uh, look, it, people could ask me about any kind of trading methodologies that are out there. You could say, "Oh, Charlie, what do you think about Elliott wave theory? What do you think about Gann theory? What do you think about, following the smart money theories?" There is no holy grail. I've been there, and like many of us, there's some experienced people here tonight. Um, there is no holy grail trading strategies. It's just a case of whether you can make that given strategy work for you and whether it suits you and your personality. So there is no real strategies that are better than others. It's just what you do and what your preference is and your style is. Um, so no, I have no view on that sort of stuff because that's just some people with any style or any strategy. Some people will be able to make it work, and others will fail with it. For every person who has studied Gann theory, for example, there'll be for every 10 people who are successful with it, there'll be 10 people who have failed at it. And it's the same with anything else. So it just comes down to the individual at the end of the day, and it doesn't come down to intellect. So yeah, fair enough. Do you know what? It's getting late for me, and I need to have. It's 10 past 9 here in the UK. I'm usually in bed, you know, well before 10 o'clock. I need to have some shutdown time. It's wonderful having an amazing amount of questions that I've had here tonight. We've had a little bit of chat on the markets earlier. I need to go as well. Otherwise, we'll sit here even longer again. So thanks ever so much for your questions. And hopefully, for those of you who didn't ask any questions, you still enjoyed the broadcast here. And if you're just watching the recording, then I hope you've enjoyed the recording and all these questions that we've gone through. It's always fascinating for me to see the various types of questions that we get. I can see the people who are experienced. I can see the people who are the early stages of their own journey. And we are all on journeys. So it's nice to be able to get together and do this sort of thing periodically. But I need to get myself ready for bed. So I'll see you soon. Take care for now.